Hello traders and welcome to the Technical Trader. Today I'll be talking about my trade setup this week and I'm looking to trade three stocks: MTOR, NIO and Alibaba. This video is for educational purposes only. Let's start with MTOR with the ticker symbol MTOR. MTOR is a manufacturer of automobile parts including drivetrain, axle, brake and other parts for trucks, trailers, buses and even for military vehicles and suppliers. We see the current price at around 25.50. This is considered to be below fair value, which a lot of analysts put the stock at around $33. However, we look at this stock only from a technical analysis standpoint. So when we look at the daily chart, we see a descending channel, which is typically a bullish reversal pattern, meaning that the price will bounce out of this channel a few times and then the highest probability scenario is to break to the upside. We've seen that the last Friday that the price broke out of the channel right here from 25 to 25.50 something. And there are three scenarios in this situation. So the first scenario, we see a continuation of the break, and the first stop, the first highest resistance zone is 27.50. So that could probably be the first stop of the stock. Then the second scenario is the price goes slightly higher and then turns back again to test this trend line. So it could probably go back to 25. And the third scenario is we see a pullback within the channel, meaning that this was a fake breakout and the price goes lower to around 2021 price zone. So how would I trade this setup this week? I'll set half of my position to enter at the market buy order. Of course, if that market order when the market's open is around this zone, so I won't be buying if it drops within the channel, because in that case we will be certain that this was a fake breakout. So I'll be likely buying in this zone somewhere from 25 to 25.65, let's say, somewhere like that. I will put my half position here and another half I would put at buy order 25. So if the price returns to 25 to test this trend line, I would make sure to enter again, and I will be waiting for my first target to be 27.50, as I said. The second target would be 29, because it has a strong resistance zone here, 29. And my third target is 32.50, so this would be my third target. First, second, and third target mean that I would likely either take out all of my position in one of these zones, or I will just take some small chunks out of it until all of my take profit targets are reached. As for the stop loss zone, I would probably put a tight stop loss here, and I would put it likely around 24. But this is a place where a lot of this moving averages converge. So even if the price retreats, this could bounce out of here. So the highest probability stop loss to avoid being triggered is somewhere around 22.50, but I'll put it at 24 anyway, because if the price gets back into the channel, I won't risk it and I'll probably get out sooner. Another alternative to this trade is you can, if you don't want to enter now, you could probably wait and see if the price eventually drops, as I said, to this lower trend line, back again in the channel. In that case, you could probably set a buy order somewhere around 22.50 or 20.50, something like that. And then unless the price breaks lower, but I doubt it, so we'll likely see eventually either bouncing within this channel again, or we'll see a breakout and retest of this high of 32.50. Next stock on my list is the popular electric vehicle manufacturer NIO. So NIO started recently selling its cars in Europe, in Norway, and last week Goldman Sachs upgraded the company to buy with a price target of 56. So this is the zone that Goldman Sachs are expecting to be reached. In the long run, I'm sure that eventually the price will reach this point. Not sure when, but I'm pretty sure it will again at some point in the future. But from a technical standpoint, we see that the price had already broken out of this falling wedge. Falling wedge are also bullish patterns, meaning that once the price is stuck a few times here, usually we're looking for 6 bounces. So we see 1, 2, 3, 4, 5, 6, and we have 7, and then the breakout. So the breakout is highly likely. On top of that, we see a divergence in the MACD. So the price makes lower lows and the MACD makes higher highs. This is usually a sign of reversal. Also, we see here another trend line. So if the price eventually returns, we could see a bounce somewhere around 33, this zone. But I think the price will start going higher. How high in the near future? We'll see. So how would I trade this setup? I would likely set up a market buy order or limit buy order somewhere around 35 to 36. My first take profit target is $40.50, somewhere around this zone. I'll likely take out some of my order out here. My second target is 45, which is a strong resistance zone, which will probably at some point coincide with this upper channel trend line. And then my third and final target would be 53, which is I'm trying to hit this peak over here. And actually, if you like this stock and you like to buy and keep it for the long term, I think regardless, this is a good entry point, and you could keep it until probably the stock reaches again this 63 zone, maybe even higher in the coming year or years. So we'll see about that. And my stop loss in this case will be set at 30. So this, I think, is a decent risk reward ratio if we're going all the way to the third stop loss, and I'm going to trade it like that this week. In case we see the price fails in the market open on Monday, or we see the price, regardless of the breakout, probably this was a fake, let's say in that case, and the price retraces back, then I would probably wait to re-enter somewhere around 33. And again, in this scenario, I just will get a cheaper entry zone, but I will still put my stop loss at 30 for now. And the third stock for this week that I'm keeping an eye on and I will likely trade is Alibaba. So we saw that Alibaba made some interesting moves last week, and this coincided with a strong support zone here, the lower trend line, and it's touching the strong resistance zone here. But this is on the daily chart. But if you look on the weekly chart, we can see a really nice engulfing pattern over here. This white candle engulfed the last two candles. So this is generally a bullish reversal signal. And in the daily chart, we see the three white soldiers. This is also a bullish pattern. So the likely scenario, again, the MACD here is also diverging. So we're seeing here the price is making lower lows, but the MACD is making higher highs. So in this case, it's likely we will see a break up. I mean, everything could happen, of course, but the highest probability scenario that I am seeing is a break high. So I would set my buy limit order at 163.30, or it could be 163.50 to make sure is above this candle. So if the price returns back, I won't get my order won't get executed, and I would stay out of this trade. But if the price keeps going higher, I will enter. In this case, I would put my stop loss at 133. This is too low. 133.65, something like that, something like this here. And I would start making sure hoping my targets will be reached. First target is 175. Second target is 191, and my third target is 211. This basically coincides all with support and resistance zones from the past. Now, of course, some consider this stock to be cheap for now. A lot of analysts value this stock at around 300. So regardless whether you're looking to trade it short term or to keep it for the long term, this could probably be a good time to enter in this stock. But yeah, that's what I'm going to do this week. Thank you for watching. If you enjoyed the video and found it informative and useful, like, share, subscribe, and hit the notification bell so you don't miss my next video. Thank you guys, and good luck.